bull put spread, a weekly options trade that we put on yesterday. We put on the 1600. 1597.5 bull put spread. We got 70 cents for that. It's pricing around 35, 33-ish. That's about 1,100 bucks. That's about $1,000 in a day. That's a, 50% gain? 55% gain in a day. So there we go. The 1600, 1597.5 for 70 cents, risking 5,400 bucks to potentially make 2,100 bucks by Friday. Folks, anything can happen by Friday. So like the guy in the song said, go on, take the money and run. I'd try and get out of this thing right around 33 cents for an $1,100 gain in a day. Nice 50-ish, 55% gain in a day. Don't forget, head to BocaTradersConference.com. We are literally 30 days out. Saturday, June 30th, we're going to be getting together down here in God's Waiting Room, also known as Boca Raton, Florida. So head to BocaTradersConference.com to get some info on that. Why would I close the Amazon bull put spread, man? Take a look at the just kind of the front of the Wall Street Journal here, man. Not only do we have obviously the trade talks going on with China. And this was an out of the blue. Yesterday, the $50 billion in the middle of the morning announcement that, hey, June 15th, this was a big shot across the bow, folks, and it caught China off guard. That's not a good thing when your negotiations is to, catch the other party off guard, especially with a kick in the jimmy. And that ain't good. So, we have the potential North Korean summit going on. We have a trade war with China that's getting hotter, so to speak. And we have an absolute clown car in the Eurozone. This is another reason, and I talked about this yesterday in our primary live trade brief. I don't trade the Eurozone. It's just the only time I trade the Eurozone is like around the Greek debt crisis and the Brexit. Around when they have these clown cars like this, I usually jump into it because it's comical to see what's going on. So we got kicked yesterday with Italy's president searches and not forming a government, a coalition, and all this stuff, and the potential debt default. It really is the chickens coming home to roost. After the Greek debt crisis, I predicted this. I said that these southern European countries that party their asses off, that are financed by the northern countries, Germany and your Norway, Sweden, Denmark, all those type of folks, eventually this is going to happen again. And 3 years later, here we are. So this is on the radar. And oh, by the way, U.S. sanctions start to pinch shipping in Iran and impact oil. And by the way, with friends like this, who needs enemy? Iran plotting with who? U.S. allies to skirt Trump's new sanctions. So obviously, I really don't care what Great Britain and France think. Well, yeah, they're allies and stuff like that. But until the Iranians start stomping all over the French and British flags on a daily basis and scream death to France or death to Britain, I don't care what they think in this case. We're going to do what needs to be done. Brazil, talk about a clown car, still is just not in a good way. The government's claiming that this truck strike is over, and we're seeing the EWZ maybe finally pull out of this nosedive here. This has just been, yesterday the EWZ was down 5%. All they're doing is hurting their fellow countrymen, the Brazilian truckers. I get it, but this is the exact opposite of what is listed on their flag. So we'll talk about the EWZ today maybe today in our accelerated retirement session. Bottom line, we're the best house in a bad neighborhood, right? As global growth loses steam, where are people going to go? Here. Oil prices, they're getting, upper 60s, mid 60s, but oil prices could soon spike towards $100 a barrel, regardless of OPEC and Russia. And I just read a report a little while ago, a buddy of mine sent me who trades oil, that OPEC and Russia deal is potentially falling apart here in the near future. We know Venezuela is a clown car. We know the Iranian deal and the sanctions might sit that. I'd be getting bullish on oil here. Now I know energy. Let's take a look at the XLE. The XLE kind of ran out of steam here. We got long XLE calls right here. Got out of them around here. I said get into some more. As we started to roll over, I said get out of them. With what's going on today, might be time to take a look at XLE again with potential Iranian sanctions. Not potential, the Iranian sanctions will kick in. Venezuela is going to collapse, and the deal between OPEC and Russia is about to go as well. Love this headline, when the charm offensive from Facebook just turns into being offensive. Can't stand Zuckerberg, the I really do think the dude's a cyborg. I think that's one day they're going to spring that on us, like, haha, check out our technology. The dude ain't human, and his emotions and everything like that. His apology tour in Europe just kind of, it didn't go too well. And of course, the cheerleaders in this country have ignored it, but there's a lot of roaches in that kitchen. Still long-term bearish on Facebook. Even though short-term it's got some airspeed underneath it. We're going to talk about Visa in our 1 o'clock accelerated retirement session. Love Visa. We've been in a Jan 20 that's been looking good. I think we got into it about 6 months ago. Yeah. Right there in the fall, yeah, towards the end of the year, we got into Visa. Stock is up 21% since we've been in it, and we've been trading bull put spreads along the way. A little bit of an iron condor, I think, in the middle here. So we've been printing money in Visa. We'll talk about that at 1 o'clock. Non-farm payroll on Friday. I think this is a little bit of a dead cat bounce or a relief rally. I mean, hell, we almost literally touched or tested the 50-day moving average right there and got a bounce here. I don't think the all clear is sounded. This is not the... like I said, this is kind of a relief rally, okay? Italy ain't getting cleaned up anytime soon. I'd be shocked if this thing happens in 12 days between these two dudes. If it does, great. But this is the sleeper story. Remember all this volatility back here? Renewed trade war fears. Okay, I guess they went away. Renewed trade war fears. I guess they went away. Trade war fears. Well, here comes Larry Kudlow and to come out and soothe the markets. This stuff hasn't gone away, folks, and the fact that we shocked the Chinese with this yesterday means that there's dudes sitting in a room in China going, okay, how do we respond to this? Their response is not going to be, okay, you guys win. It's going to be bad, and I think we're seeing a dead cat bounce here, and we're going to go back down to this 50-day moving average. I think now is a good time to hedge and potentially get long volatility, especially in a relief rally like this. Yesterday, a lot of my members closed out some VIX calls last week. Right there, I said something is going to happen in the next couple weeks. Everything I just briefed you, one of those things is going to cause this market to freak the hell out. I didn't think it was going to be the Italy debt crisis, but it doesn't matter. When you feel that, when the hair on the back of your neck starts to stand up like, you know what, something ain't right, and volatility's gonna pop. Those calls, I think, tripled in value in a week. So really nice looking trade there. But with the VIX down here in the mid-teens, I'd be looking to get long vol. So, all right, folks, I got to run. Have a great rest of your day. Happy hunting. Make sure you hedge. God bless, and I'll see you tomorrow for Thursday's Market SITREP.